Welcome back to another Anatomy of the Trade episode. Today, together with Franz, we're discussing the market update. Market, had a reversal, so we want to comment on that. So with that, Franz, let me just ask you right away. So, how did you look at this rally that we have been since the March 23rd low? And what were the maybe like the expectations for the rally?
Hi, Ramon. Well, the way I looked at it, I noticed that there were three swings that I could kind of detect in my charting, and they eventually petered out. The thrust was shortening, and yeah, there's a second one, and then the third one. And since then, we have somewhat gone into a sort of a trading range, it looks like. So the stride that I had defined for the channel that that these three swings were moving in was broken. So the question that I had in my mind is, what's going to happen next? Are we going to, top out here, or are we going to, just go into a consolidation range and build some cause for another move up?
Hmm.
So that's kind of the way I thought about it.
Yeah. Well, as tape readers, we definitely just pay attention to the price and the relationship with the volume. And this was very funny how it all happened. So a couple of days ago, um, I was presenting at the final bar, and then into the close. Here is this break to the downside. But we could anticipate that, right? So even though, let's say, we are outlining here the scenario where we're showing an uptrend, but what do we say? We're saying that if there is a failure below specific levels, then we would anticipate a change of behavior and a signal to the stop of the current rally. And if there is nothing of the sort happens, then we're still in the uptrend. I think it's a very important idea here because a lot of people have this anticipation, um, and from the experiences that we have, it's just better to follow the price, observe the price, how it starts moving in the opposite direction, how it starts exhibiting different characteristics, and then you open the position in that direction. There were quite a few people opening the position here, here, and maybe initially that was a profitable position, but this lower high, if fails, was a much better signal. It was a much more consistent signal with the deterioration of the conditions going into the lower high. So let's look at that. And here it is. This is just in sequence. Again, this is on the 12th. And Franz, what do you see here? I mean, what's different on the 12th that we didn't see, let's say, on the 11th or the 10th?
Well, I think that the character of the move off of the top is more aggressive. We've got wider spreads. We move down more quickly. So we could be thinking about this as one of two different ways. And one of the things that you've always stressed is that you've got to take both possible outcomes, the bullish and the bearish, into consideration. So for me, we could be looking at a LPSY here with volume off of the top and a selling, taking us down through the bottom of the trading range, making a sign of weakness. Or we could be looking at possibly a second point of fear in a consolidation range that's going to result in a phase C that's going to clear out some of the supply, some of the the demand will come back and will be, you know, ready to spring and move higher. So those are kind of the two possibilities, and we're sort of at the moment of truth. We're getting very close to the moment of truth. We're going to find out which of those two possibilities, at least for the next swing, is going to work. Is that? I mean, what do you think?
Yeah, absolutely. Those are the two. So either a sign of weakness, or in phase D for the distribution, or a potential phase C low. So we'll come back to that slide and we'll look at this a little bit more. Coming back to the 12th. So Franz has started with the character. So character is extremely important. Look at how the price moves to the downside here. This is very kind of orderly. This is a more of still bullish looking type of reaction. The only difference between this reaction and let's say this reaction is the size. So the size definitely shows us a change of behavior and suggests that we are in some kind of trading range. But there is nothing still threatening in terms of their aggression to the downside. Now the next one is kind of the same texture. And please note when they happen. This is during the Asian and European sessions, not during the US. US is still pushing the price up. And now when we come to the 12th, there is definitely a big difference. Increase in spread to the downside, increased velocity, increased momentum. So something is going on. And not only that, it happens during the US session and supply increases, produces those sharp reactions. So the character actually defined for us the timing that selling is of a different sort. It's more aggressive. And that was kind of like the call there. And obviously we have, quite a few strides here to the upside. And then the break, this bar right here. And as it happened, the volume signature increased, supply increased, and we would be expecting, at least at the minimum, the same type of move that we had before. So at the time of the recording, we're right here, we're entering our first potential target. And I think, Franz, you are talking about the trading range that spreads out like this, correct?
That's what I'm saying. Yes.
Okay, so then the biggest question now is like, what is this reaction? Is this
Mm-hmm.
truly a sign of weakness or is this phase C? So how would we deal with this, friends? How would we be thinking about it? Or how would the sign of weakness look in comparison to, let's say, phase C, spring?
Well, a sign of weakness would we refer to the ice. We refer to kind of the invisible support that is holding this trading range intact, and a sign of weakness would break the ice. So we'd see a crack through, and it would probably come on possibly some additional. I guess it could happen either way. What do you think, Roman? Do you
Well,
think?
yeah. I mean, sign of weakness would break the ice, would break the support. It still would do it on the increase in volume signature. And then after that, more importantly, the rally is going to have very weakening characteristics. It could come back into the trading range, but then should bounce into the resistance that acted before the support. Okay, well, what's the difference between that and the spring?
Well, a spring is going to be attracting, even though there's supply pushing price down, it's going to be also attracting demand, which is going to be able to absorb that supply and cause a quick reversal back up. If there is penetration of the support level, it will be very short. There won't be a commitment. There will be a very quick reversal back up into the trading range in probably a fairly significant way. There might be a test, but it won't just stall if it's a spring, and if this is a phase C of a reaccumulation, it will definitely have more strength to move higher into the trading range.
Mhm. Yeah, so we need to observe how the price behaves in this area right here, basically
Exactly.
relative to the support. And that's the task for this week and into the beginning of the next week. By the way, this looks like a head and shoulder formation, right?
Hmm.
Shoulder, head, shoulder. And not that, I'm ever using this type of definitions, but still, it's very interesting just to observe how it happens. So we are right at this support, even slightly tilted support right here. So let's look at what happens. Um, one quick look on the daily. I mean, obviously we speak a lot of the intraday because this is where initial signal occurs, but you have to look at the daily as well. One of the things that is just so interesting on this reversal, as we have um, our lower highs in the S&P, Russell, and the Dow, the Nasdaq, which is a leading index, has registered a higher high. Now it happened the same way before the decline, before the COVID-19 decline in February. Nasdaq was leading, S&P was slightly behind, slightly underperforming, and then Russell had a lower high, and the Dow had a barely, visible higher high right there. So all three were underperforming relative to Nasdaq, and then on the way down, we kind of see that Nasdaq or Nasdaq stocks, specifically technology stocks, were outperforming, even though they also had a reaction. So that was also a very interesting timing tool to identify the reversal of the lower high in other indices relative to NASDAQ, and then just say that NASDAQ had a high right here. Um, and this signal was much stronger. Again, a lot of our students were saying like, well, the momentum is deteriorating right here. Well, there is a shortening of the thrust. But you have to wait for that deterioration of the technical conditions to materialize into something more meaningful. And what is more meaningful? Well, this lower high is definitely more meaningful than a higher high because it has this bearish connotation on the daily chart. So your expectation of the reaction is much more than what you've had before. And this becomes a much better trade, even the counter to the trend trade, than the ones that we had before. Franz, any thoughts here on the daily?
I think you pretty well took the words right out of my mouth.
Okay. All right. Well, let's do this. Let's come back to the intraday chart. So this is a 15-minute chart, and this is off this lower high that we saw on the daily. Lower
Hmm.
high. Here is that apex formation, and then the first initial move down. Look how aggressive this move is to the downside. Can't come back to the resistance level, though there are quite a few here. Um, so acts as an LPSY, and then continuation to the downside. So what do we see here? First thrust, second thrust, third thrust. So there is some deterioration of the downward thrust. Um, Franz, what else here in terms of the trends and the thrusts?
Yeah, that would give you some pause if you were super bearish, I would think. Uh, make a trend line off of the supply line there on the downtrend over those last three successive highs that you had going back to the previous chart actually. But you could do that. But uh, what I was seeing was there wasn't as much. I mean, the shortening of the thrust to the downside, obviously, and there wasn't as much carry through down. So there is demand present.
Yeah, there's some demand around the 13th that came here, right here, into the middle of the session, and it touches this oversold line in the downtrend. Uh, Tests later, and then has some kind of uh, attempt to go up, but it doesn't overcome this level. So this level right here around what? Around like 28, 25. This was an important level to look and to observe on the way down. And this is now an important level to observe on the way up if we're going to have another attempt to go up. So 28.85, where we're going to end up today, the close is going to be pretty much, telling us what this was. Um, and just in the last 2 days, we have some kind of formation right here, again, defined logically by all of these support levels. We got actually into our target zone of 2700 to 2775, so we hit that. And as US Open shows us, some supply came in and then stop in action around oversold condition, and very aggressive demand comes in and just pushes the price up after the shortening of the thrust. So on the intraday, we are expecting some kind of attempt, for the demand to establish itself at this point. And if it fails, meaning that, the price would do something like this, it's going to consolidate, then most likely we're just going to see some kind of continuation to the downside. If the demand is going to be more aggressive and will do something more of ability to stay in this trading range right here after a potential spring, and then have some signs of absorption, that would mean that there may be some, attack of the 28, 25 area. And if the price overcomes this level, then we would be thinking about, slightly higher targets. All right, Franz, what else should we mention here?
Well, I think one of the things that's always interesting is when we're looking at these kinds of charts, there's always a tendency to try to fit them into some sort of a
Mm,
preconceived structure that we might have.
yes.
And it's very comfortable to do that. I know when I first started studying this, I always wanted to try to identify where's phase A, phase B, phase C, and not think a whole lot about the underlying price volume behavior that was causing the structure to evolve, and that can be a trap. So it's very important to look at more than just the structure itself, look at the underlying, as Ramon pointed out with this last swing down. Look at the character, evaluate the amount of supply that's coming in, where you think the support levels are going to be, and really slice it and dice it a little bit more than just trying to determine, well, what's my structure that I'm working with here, because that can get you into some troubles I've discovered myself.
That's a really good advice. And, the tendency here is just to right away start labeling. But what are you labeling? You are labeling some kind of bias that already is in your head. So what is that bias? Is this a reaccumulation or a distribution? And you need to come to the conclusion about the bias first in order for you later on, to start labeling in the correct way. So Francis' advice is absolutely on point here. Um, Look at the whole structure, right? So I think that the hourly, 2 hours, 3 hours right now act as a really good reference point for how to view the whole structure at the bottom and how to view the current structure right here that we have. And you kind of see a little bit of the tilt to the upside. And I think the key is going to be here in this area. We had some characteristics that the supply was coming in. It was predominantly based, around the news coming in from the Fed and from the government on the virus. So what is the price going to do here? Is it going to consolidate, try to go up? That's one scenario. Or try to go up, fail, and that failure, the weakness, is going to give us a hint as to more potential downside objective. All right.
Mm-hmm.
Well, we'll have to see and wait how that's going to unfold. as usual, thank you guys so much for watching. Thank you for all of your comments on YouTube and on Twitter. We appreciate this. And Franz, thank you so much.
Thank you, Ramon.